Everybody, Dave here, Hidden Freedom Investing. In today's video, we're going to go over and just kind of recap 2020 a little bit, and we're going to kind of talk about the recession and the market decline that we had in February through March. And is there any lessons that we can learn from that? What did I do? How did I deal with it? And kind of look at things now and going forward. So let's go ahead and get started. Wow, what a year 2020 has been. I mean, it's good to get it, out of the books. In the next few days, it should be gone, and it'll be in the rearview mirror. But what a crazy year 2020 has been. Oh, I took a couple of screenshots of 2020, some of the major highlights. This is back from March 16th, and that was the market halted right there. And I mean, probably many people, if you haven't been investing for a long time, you may have never seen that ever in your life. Look at that there. The Dow Jones down 9.7%, and the whole market just halted. And I don't know if that was a 15-minute halt or an hour halt, but I have multiple different ones of these as well. Here's another one here from March 18th, another halted day. And we got 7.8% down on the Dow Jones Industrial, and the good old ES down to 5.6%. Here is another one. This actually was my dividend portfolio back on March 9th. Now, a lot of these positions I've gotten rid of since then. I've done multiple videos on my dividend portfolio. You can take a look at that playlist if you want. I've added a lot of positions. I've taken some positions away. We'll kind of talk about that here in a second. But look at that there. All my dividend stocks are halted. And look at that there. Chevron and ExxonMobil, JPM, Goldman Sachs. Those are all down double digits there. Oil just got crushed big time. But it has recovered a little bit. So let's go ahead and take a look at another one here. There's the good old Fin Visitor from March 9th there. Just right across the pond, and Google down 5%, Microsoft down for 5%, Amazon down 3.7%, and Apple down 5.6%. There was no place to hide at all. Here's a screenshot from March 13th, and again, Amazon down 7.9%, Google 8% down, Microsoft 9% down, Apple down 9.88%. There was no place to hide. I mean, Occidental up there is green. What's going on there? And I'm sure this freaked a lot of people out, and we're going to talk about that here in just a second. I just want people to understand how devastating and how quickly this happened. And here's some ETFs that I follow. This was on March 12th. Okay, that wasn't even the low in the market. But here's March 12th. Look at some of these ETFs here. Everybody knows, VTI down 8%. VPU, VXUS, that's emerging markets. Or international, down 10%. Even the bonds were down 2.5%. Everybody's beloved SPHD there, down 10%. This is just in a single day, okay? SCHD, that's another good one from Schwab, all right? That's a dividend ETF from Schwab, down 8.7%. VYM, that's one of my favorites there. Vanguard's dividend, high yield dividend ETF, down 8.5%. And, I remember back then, back in February, March, April, that whole time frame, when everything was going on, February through March, the market low was about March 23rd, I believe. People in Gen X's Discord here, if you haven't, been to his Discord before, go to his channel, Gen X Dividend Investor, go to his channel and take a look at the Discord. I do frequent it quite often. You just have to go ahead and DM me or just at me. But people are hanging out in the dividend stocks area here, and they're talking about, they're freaking out, they're panic selling, and they want to sell everything out of their portfolio and just wait for the bottom, like they can time it perfectly, right? And I was in there, and many of us were in there that have been around the block, not in the corner of the block, but we've been around the block. And we've been through a couple of recessions and a couple of market declines in our lifetime. And we pretty much were just preaching, hey, just pace yourself. Don't spend all your, cash that you have available all in 1 week. The market could go down a lot further. The market's only down 10%. That's not even a recession. It's not even a correction, really, at that point. It's not even a bear market. So, I mean, you just have to pace yourself, right? And many people are in this Discord here they're out of money and they're freaking out and there's nothing else they could do. I mean, that's the reason you pace yourself. But I even had a couple of DMs, people basically asking, hey, I'm worried. Should I invest? Should I not? And I basically just said, hey, I mean, what other choice do you have? If you don't invest, what other choice do you have? You keep your money in cash where you're going to just lose 2 to 3%. At least that's what the inflation they tell you it is, right? It's probably a lot higher than that, honestly. You just having money sitting around, you're just burning a hole in your pocket anyway. It's not going to do anything. The best thing you can do is invest, all right? And we're going to look at that. How's my portfolio doing now, right? If you don't invest, you are literally going to fall behind. That's the reason why the poor get poorer and the rich get richer, because they're not invested. The poor people are not invested. Not only do they spend all their money, trying to look rich, they have no money to invest at this point because they've, spent their money, a monthly check or whatever on an expensive car they don't need. So the best thing you can do is, to be rich and try to look poor. So the reason why the rich get richer is because they're invested, okay? And that's the reason why the poor getting poorer is because they're not invested. That's part of the reason anyway. The other reason is they just, try to keep up with the Joneses. But so I did have somebody ask me, hey, should I invest? Should I not invest? And I'm like, what other choice do you have? You invest, right? What if the market goes down? And I'm like, I mean, the thing is, the market goes to zero, which is not going to happen. But if the market went to zero, money is not going to matter at this point, okay? That's a key thing to note there. Like literally, the market goes to zero. You have millions of dollars in there. It goes down to zero. Money is not going to matter at that point. The only thing that's going to matter at that point is brass. So you've probably heard maybe a saying that the market takes the stairs up and it takes the elevator down, and that is pretty much a very true statement. Now I've been investing for literally about 20 years now. Okay, so it was just about 2001 when I started investing, so I missed that dot-com bubble. But I do remember it, and I mean, I was, still pretty old, but I wasn't quite invested heavily in the market back then. I really started investing about 2001, so I kind of missed that a little bit, but I do remember the 2008 recession / financial crisis, literally like it was yesterday. And I was comparing a lot of things that happened towards this recession and market decline compared to the last one. And there's a lot of differences. There's some similarities, but there was a lot of differences as well. How did I play the market recession and market decline this time? Now, it did catch me off guard a little bit, but I did have quite a bit of cash just laying around because I was kind of waiting for it. And now that could be a wrong move. Nobody can play it perfectly, okay? Don't let anybody convince you that they can either, okay? In my opinion, and I'm going to toot my own horn here, I played it about as perfectly as I could play it for myself, all right? I had quite a bit of cash laying around in multiple accounts because we're already, 10 years into a bull market. And I just felt like, I was already in capital preservation mode anyway. I was building out this dividend portfolio here. Started at $50,000 during earlier this year, and then we're up to $387,000 now. So you can see that whole playlist, the dividend portfolio. I call it the lifetime dividend portfolio playlist. You can take a look at that. Literally, from back in January to I haven't put December's out yet, but starting that portfolio and some of those positions I dragged from 2019 into 2020. Some of those positions came over from then. So yes, they took a hit. All right, and you can even see my positions in there taking a hit. As the market went on throughout the year, you can see my portfolio. You can watch it every month. I did an update. If you bought the f***ing dip, go ahead and like and subscribe and hit that bell notification. So these are the positions I have left, and there's 30 positions in here. I've gotten rid of a lot of positions. There's been a lot of churn in here, but for the last several months, it's been remained stable. I don't have any plan to get rid of any positions. I don't have any plans of adding any new positions at this time. But look at this, I'm up $38,000. All right, realized gain and loss percentage, I'm up 11%. All right. Now, the market went down about roughly 40% in March. March 23rd was the low. I picked up Apple there right on the March 23rd low that day, literally. I'm up 117% in that position. Okay. Now, how did I play that particular market decline? All right, so in February, we had that pretty big, like 1 week sell-off. I pretty much, every about 5 to 10%, I'd throw in about 5 or 10% of the capital that I had laying around. All right, and then when the market went down 20%, I went in and dumped another, 10 or 20% in of the free cash that I had available. When we hit 30, I even dumped even more in. And then when we hit roughly, it wasn't quite 40% if I'm not mistaken, I think it was about 37 to 39% down we had total in March. I went ahead and then dumped even more in. Now, did I have all my cash deployed at that point? No, I did not. Because I was expecting us to go down 50%. Now, I just got lucky enough that we went down 40%, right? If we only went down 10 or 20%, I would have had a lot of free cash just saying, kind of sitting around on the sidelines waiting to be deployed, all right? So, everybody's going to be different here. Everybody's tolerance is different. Everybody's, going to deal with the things differently. Some people may not have any cash available at all. They're just going to have to write it down. I suggest that when you're writing it down, try to find some free cash to invest, okay? Because you're going to end up better off in the end, all right? The market's literally only been 9 months since March, right? That's enough time to give birth, okay? The market's down 40%, and here we are in December, 9 months later. And here I'm up 11% out of my dividend portfolio. Okay, and I've built this up throughout the several months. Okay, so January through December, and here I'm up 11%, $38,000. That's $38,000 I didn't have earlier this year. We have no idea when we're going to have a market decline. Okay, a 10%, a 20% is not unheard of. Those are actually good for the market. They cause the market to go up, make new highs because it brings fresh new capital in, and it makes sense, right? You're at all-time highs. A lot of people have some cash sitting on the sidelines. They're waiting for a pullback, and yes, they BTFD it. Okay, so what's the important lesson here, right? The important lesson is don't panic sell, panic buy. Okay, let me say that again. Don't panic sell, panic buy. Okay, now I'm going to say that just in reason, don't panic buy, but it's a great little slogan there that you won't forget. Don't, literally go out and spend, $100,000 is laying around and market goes down 10%. Just don't deploy that $100,000 all at once. DCA your way in, dollar cost average, right? And that's exactly what I did through the last 9 months or so. I've been dollar cost averaging a large amount of capital. Literally, I built this portfolio from $50,000 up to $388 just this year. All right, and I have a lot more capital I have planned on going in this particular portfolio as well. I still have about $600 and something thousand I want to get deployed at some point in this portfolio. As my real estate notes bleed off, that money will be going to this portfolio. Okay, and so I don't really have a lot of cash lying around at this point. And I'm going to give myself a pat on the back because I pretty much played this perfectly for me. I don't think that I would change anything. Yes, I was waiting around for a 50% decline. We did not get it. I was also expecting us to, kind of just muddle around for quite a while and not really go up and V-shaped recovery like things kind of did. Things recovered. Some positions recovered literally in 60 days. Some took about 4 months, and we're already past. We're making all-time highs at this point 9 months later. All right. So how did you play it? Did you get in after the 40% decline? Did you sell out and then wait, try to time the bottom, which is impossible to do? That's why you need to play the strategy like I did, right? Add in 5 or 10% every time the market drops 5 or 10%. You get down, 30%, start adding bigger chunks in. You hit down 40%, even add bigger chunks in. And my ultimate low was 50%, which we did not get. So I did have some cash laying around that did not get it deployed. So is there any lessons that you learned from this recession? One of the lessons I learned is this one, came out of, it was kind of a little more predictable than 2008 was. 2008 kind of drug on a lot longer. It was about a year or so, year and a half or so. Recession was a lot more devastating, in my opinion. Even though this one's technically more devastating, it really wasn't for the market. As you know, the Fed kind of propped this up with the helicopter money, and I think that helped, considerably. I do remember that one like it was yesterday, but this one, was fast and furious. So just looking at my portfolio here, there is positions that have not fully recovered, and those, some of the oil sector there's some sectors just not recovered completely, but I do have a lot of winners in here. Apple there is a good example. JP Morgan, 21% already up on that. Look at this Caterpillar right here, 55% up on that. And we got Colgate-Palmolive up 18%. We got AbbVie up 33%. That was in one of my original positions as well. Good old Home Depot's up 35% there, and we got APD up 22%. So, there's some positions that are still down. Intel is kind of a late add as well, and some of these other positions got carried over from 2019, like AT&T here, which is still down. These are dividend paying stocks, so I've only had a couple positions I got rid of that cut their dividend. Now that was Disney, which I didn't even buy for a dividend portfolio anyway. And then Wells Fargo cut their dividend, so I cut them. So that was just one position. I think that's the only position I actually had that cut their dividend. So that's the importance of getting in some of these, quality stocks right here that have a history of consecutive years of dividend increases. Look at these here, 58 years, 64 years, 58 years, 51 years. Matter of fact, we just go back to the overview here, consecutive years of dividend increases. Procter & Gamble is this number one position there that has 64 years, followed by 3M, Coca-Cola, JM, and, Colgate-Palmolive, Altria, and all that. So we can kind of filter those as we want, filter from all these things here. So the lesson learned is there wasn't really a lesson learned for me. Hopefully you learned something through this recession and this market decline. I think at any point we could have a October through December of 2018 happen again. That was like a 20% decline literally in about a month or so, and there was no real reason for that. Some people might say it was for the fiscal cliff or something like that, but it was really unexplained. But it doesn't matter, because that decline was a great opportunity to add some fresh capital in and get pushed to new highs, right? And the same thing is happening with this decline as well. This was the perfect time to deploy cash and really expand your wealth and build your wealth quickly. Hopefully you played it okay. You did not panic sell, and you panic bought. So if you have any questions, comments, or concerns, go ahead and leave me a comment below. Go ahead and hit me up on Facegram and Twitter, or go ahead and shoot me an email if you want. Hope everybody has a great Christmas, and let me know how you played this recession and this market decline. I would love to hear your story. So with that, go ahead and like and subscribe, and we'll see you next video. Thanks for watching.